Hi, I'm Nikhil Aggarwal, founder and CEO of QnA, an alternative investment platform for all Indians. Building a diversified portfolio is similar to having a diversified meal where you're mixing different food types, vitamins, minerals, proteins, carbohydrates, or similar to watching different content on different days of a week. It allows for creating of a more healthy body, but it also allows for being better entertained. The same is true for investments. If you're able to mix stock market investments which are market linked with fixed deposits which have a great degree of safety and not market linked with other types of investments, you are ensuring that you are giving yourself and your money a more healthier and more sustainable way of growing itself. As you think about investing and you think about building a diversified portfolio, today's investors in India are largely limited by two options. One is stock investing, which is predominantly market linked, and second is fixed deposits with banks, which are not market linked but have a very low fixed income return. Introducing new options into your investment portfolio can bring a different flavor into the investments. There are a bunch of new options that have now been introduced which give you options to have a higher return, monthly payments, outsized returns in terms of equity bets in the unlisted space, and exploring these options is an important part of building a higher return earning as well as a more stable investment portfolio. We're all familiar with what startups are today. It's impossible to miss the buzz and hype around them every time you open a media journal, a newspaper, a Google News article. And these companies also offer an interesting investment opportunity for investors today. Startup equity is the ability to invest in shares of a company early in its stage, much before it has gone towards a listing or a public IPO. For example, many of us use an application like Swiggy to order food or have been customers of delivery for being able to receive parcels at home. These companies started their journey 6 or 7 years back and since then have been considerable value to become unicorns in India. Startup equity is an opportunity to participate in investing in these companies and benefit from their growth early in their journey and become shareholders in that expansion. Imagine the opportunity to participate alongside well-known VCs, global funds that are investing in companies at similar terms so that you can also see the kind of expansion and value that they have seen with their investments. Startup equity is a very different asset class. It's something that can give you 100 times your return, but also is something that where you can lose your entire capital. You are participating or investing in companies that are doing disruptive things, new technologies, new industries, and hence can create significant value. But also at the same time, because of the risk and the disruptive nature of the businesses, sometimes can also fail and result in a loss of capital. Investors participating in this must be aware of both the upside and the downside. One of the other important features to remember is that this is an unlisted product and hence liquidity in this product is limited and any investment made must be with a horizon of at least 3+ years. Very recently, Sebi has made it possible for investors with smaller ticket sizes to also participate in startup equity. There is a license by Sebi called the Sebi Cat-1 AIF Angel Fund License, which allows individuals having a minimum net worth of 2 crore rupees to participate in such opportunities. Investors accessing this license or investors participating in funds with this license need to commit 25 lakh rupees over a period of 5 years to invest across opportunities. This allows you to invest as less as 1 lakh rupees across opportunities as long as the total investment value is 25 lakhs. From an exit perspective and from a taxation perspective, at the time of exit, your returns will be taxed as capital gains, short-term or long-term depending on the time of holding, and you will pay tax on them as per the slab set for short-term or long-term capital gains. As I mentioned before, startup equity is an asset class where you can make 100 times returns or you could also lose your capital. These are companies that are doing disruptive things and hence may see a failure in their business model. One of the mistakes that people can make is not diversifying their investments within startup enough. If you have a portfolio of 10 to 15 startups in your investment portfolio, you are likely to see at least some of those companies break out into success and some of those companies having to shut down. Building a diversified portfolio of startup investments is one of the things that every investor must look to do. Number two, because there is a chance of loss of capital, it is important to invest only as much as you are set or prepared to lose in terms of capital. Taking a risk beyond your capability is something we would strongly not advise. The most important lesson to remember in investing in startup equity is to get familiar with the business and the founder that you're investing with. These investments are made at an early stage where the founder and the core management team are going to be the makers or breakers of that business model. The time you can invest in understanding their background, doing ref checks, seeing who is backing them, and whether there is a strong corporate governance are some of the most important things that you can do as an investor. Please also make sure you're comfortable with the industry and business model. You understand some of the key fundamentals behind what is driving it, and those are things that you are ready to get excited about or invest behind. I hope you found that useful as an introduction into startup equity. To learn more, please check out our website, gripinvest.in. You can also reach out to us using our email IDs mentioned on the website. We are providing access to alternative investments, including startup, in a very differentiated and curated manner, and hope that our website will be able to provide you with the requisite information to make sure you make the right investments and build a healthier portfolio.